China has just released its 15th five-year plan, which is shifting focus from what you might have called a pure innovation focus to a broader attention to industrial modernization and resilience. Broadly speaking, China is seeking to balance growth, tech, and social stability as it seeks to be a more dominant player in the world. First, industrial focus. So China is making it very clear that tech is no longer going to be the top focus to the exclusion of other things. They are trying to focus on the resilience of more traditional industries and manufacturing, and they want that to be given precedence alongside tech. At the same time, they are pushing aggressively for technological self-reliance, and that means a focus on AI, semiconductor chips, quantum computing, and biotech. Obviously, those are areas in which countries like the US and areas like the European Union also have a huge interest in a lot of investments. So very clearly, we're going to continue to see a lot of heavy competition on that front. And this, I think, is also why the AI chip war continues to be such a huge issue for China as well as for the US. Third big issue, they're seeking to balance economic growth across their economy. So they want a steady growth rate, who doesn't, while boosting domestic consumption and expanding their service sector. This is interesting. Their stated goal is obviously to create more of a sustainable high growth model. But I think it also speaks to one of the challenges that they've been experiencing, and we've talked about it here, which is the Chinese electric vehicle market, which has been hugely successful for them from an export perspective, but it has caused severe problems. And this goes into the fourth item that we wanted to highlight, which is something called involution. That is the term that they use for what they call excessive competition. But I think these two things actually go hand in hand, because that excessive competition is obviously wreaking a lot of havoc in their markets. And it is causing them geopolitical problems because they're being forced to export probably many more cars than they would. And that is causing issues for people in the EU and Latin America and other markets because it's destabilizing those markets. So it's a double-edged sword, I think. On the involution front specifically, it looks like they're going to have more forced mergers and more central government oversight of this. From what we have seen, what has happened in the EV market is that the local governments or regional governments are a huge part of the reason that those companies have been so aggressive, meaning they're getting tax credits or other benefits in their province or the city. And therefore, the companies are doing really, really aggressive things. They're able to undercut the market, do all sorts of shenanigans, basically. And then that causes issues for China on a national and, again, geopolitical level, too. And then the final thing that should be on your radar if you're a foreign company looking to do business or having business in China is that they are very clearly looking to have Chinese firms compete more aggressively with foreign companies and move up the value chain. And maybe there are opportunities there, but I think there's also likely to be a lot of risks for foreign operators seeking to do business in China, because I think that they're making it very clear that their own regulatory environment is going to preference their domestic firms and that they'll be aggressively supporting those companies to compete with outsiders. And our last segment as we wrap up, here's a quick readout from the US-China talks, given that the leaders of both countries just met. So it looks like there's going to be a 1-year truce on rare earths. You may remember a couple of weeks ago, China announced what was effectively a ban on all rare earths and some of the products that already include rare earth minerals from export. And that was met with very strong negative reaction from the United States, EU, and others, because those are critical for all sorts of industries, tech, autos, defense, you name it, manufacturing. So in the next year, I suspect the US and partners and allies are very likely going to try to find alternatives. The US has ramped up its efforts already this year. There's been 2 acquisitions, one being a stake in MP Materials and another in a lithium mine. And so this is something I'm sure is going to be a top priority for the administration. In addition, China has agreed to buy soybeans again from US farmers, which is good news in the short run. These purchases are supposed to go through in December and January. However, given the fact that China aggressively sourced alternative options from Brazil during this trade fight. I think it's very likely that we're not going to see the same high watermark for soybean exports that the US enjoyed just a year ago. In addition, the US has agreed that it will reduce its tariffs, so they'll decline from 57% to 47%, and the fentanyl tariffs will be cut from 20% to 10%. Now, there are some major issues that don't appear to have been addressed in this talk, and they include AI chips. This is a massive issue. The Chinese are very aggressively interested in getting access to the best chips out there, and many people in the world, particularly in the United States, have had serious concerns about that. So no real sense of what has been agreed to here. Now, the reason I don't think this is going to be the last time we have to talk about US-China trade relations is there are a number of huge issues that don't appear to have been addressed in this agreement. First of all, Taiwan. China would obviously like the United States to not be an ally to Taiwan, and we have been their ally forever. In addition, AI chips. China wants access to the most advanced chips, and this is a huge issue of national security and geopolitics. The US has been really aggressive in managing export controls, and we've talked about that in other episodes. So no word on what kind of deal, if any, has been cut here. In addition, TikTok, still don't know what's going to happen to the algorithm. That is an app that is currently illegally being offered in the United States, but no resolution as of yet. And finally, one of the big topics, it's not even just an issue, it's a wider question, I think has to do with supply chains and logistics. Given this trade war with China, a lot of Chinese suppliers and manufacturers have been shipping through other countries. So Vietnam and Mexico come to mind, but there are many others. And one of the challenges is actually managing all of that and figuring that out from both a customs enforcement perspective and also from a business operations strategic perspective. So the lack of certainty there is one of the reasons why I think boards are still very much going to be focused on tariffs and supply chains going into the foreseeable future. And with that, that is all we have for you today. Thank you so much for joining us, and we'll see you here soon. Thanks for listening. If you liked what you heard, leave us a review, subscribe to the show, or check out another episode. We appreciate your support.